Beyond the Broom with the NSA, sharing information, innovations, and market trends shaping the commercial cleaning industry. We sweep away the noise to bring you the insights that matter. Hi, everyone, and welcome back to the Beyond the Broom podcast. I'm your host, Debbie Wakefield, and I'm here with my co-host, Ryan Lemire. How we doing, Ryan?
Hey, doing good, Debbie. We're back at it.
We're back at it, and we're talking about exciting stuff. We're going to walk through the NSA market commentary for March 2026, and we're going to be asking the question that's on everyone's mind. Where are we now?
Yeah, that's a great question. Where are we now? It seems like the past year, not much has changed. There's been a lot of turbulence that has been temporary. Now we're working through the oil price increase, but to kind of give you the short answer, the economy is stabilizing, but cost pressures haven't disappeared. Some areas are cooling, others are heating up, and obviously energy is the big wild card right now.
Well, let's start with the broader economy. What are the headline indicators telling us?
So employment remains solid. The U.S. added 151,000 jobs in February, and the unemployment rate held steady at 4.4%. Surveys have showed consumer confidence has also improved modestly, and that reflects on a better labor market expectations, even as inflation concerns linger. The Fed still hasn't met their target of 2%. So we're still working through that process. Everyone wants lower interest rates, but with the impact of oil and the small impact that tariffs have had, there's still a risk out there as far as inflation is concerned.
So demand hasn't fallen off a cliff.
Exactly. Wages continue to rise. Average hourly earnings reached $37.32 in February 2026. But that supports consumer spending, and it also keeps the pressure, though, on employer labor costs, which is a huge expense for a lot of businesses out there, every business out there.
Well, Ryan, what about interest rates? After everything we've seen since 2022, where does the Fed stand?
They are currently in a pause mode, so wait and see. After the rate cuts in late 2024 and 2025, there was no rate change as of March 18, 2026. Monetary policy is clearly on hold while the Fed watches inflation data closely. So that is their approach. Wait and see, and they check the numbers every month. The government shutdowns have caused a little confusion in the reporting and the data. So there's a backlog of some data. Some data is never going to come to light, but I think it should be getting back to normal as far as reporting purposes from the government.
Well, what about inflation itself?
It's cooling, but it's definitely not gone. CPI rose 2.4% year over year in February, which is a meaningful slowdown. If you remember a couple of years ago when it peaked at, what was it, almost 9%, somewhere around there.
Right.
So it's definitely come down. However, producer prices continue to increase, and that's signaling that an upstream cost pressures could still work their way downstream. And that's kind of that wait and see approach that the Fed is taking. They have to see what the impact is and where the pricing is for producers, for the folks that are manufacturing the products, and how they manage increased costs and pass it on to the consumer.
Well, for our industry, let's talk commodities, starting with paper.
Yeah, this is one of the more positive areas right now. PPI, pulp, continued decline, and recycled paperboard prices slipped slightly in February. For buyers exposed to paper categories, that offers some near-term relief. So you're definitely seeing some relief. I think we're seeing that within our contracts affecting we're not seeing the big price increases like the COVID eras and then the tariffs and all that. So I think things are kind of calm from the paper category standpoint.
Well, unfortunately, not everything looks that calm, though, right?
Yeah, the world revolves around oil. Chemical and plastic categories remain under pressure. Chemical manufacturing prices have increased. Plastics and resins have moved higher. And rubber and plastic products continue to increase in 2026. Some segments like soap and detergents and unlaminated polyethylene stayed flat, but the broader trend is still upwards and may be seeing an increase in those heavy related products that rely on oil until this Iran war gets situated.
And all that ties directly into energy.
Correct. Petrochemical pricing is heavily dependent on oil. Right now, WTI crude oil prices have nearly doubled in the last 3 weeks. So if you look at the past market commentaries, I think from January, you were looking at around $55 to $60 a barrel. It's currently today, as of April 2nd, 2026, it's pushing $110 a barrel. So that spike, you know, raises risk across chemicals, resins, freight, and fuel linked categories.
Well, how is that flowing through logistics?
Freight costs have showed a slight uptick in February. Diesel prices have risen sharply across regions. Now, fuel is clearly back on the radar as a cost driver for 2026.
So when we step back a little bit and look at all this, what's the big takeaway?
So the big takeaway, I think the economy is stabilizing, inflation is cooling, employment is steady, and interest rates are paused. But energy volatility, labor costs, and select commodities, especially chemicals and resins, remain the primary pricing risk as we move through 2026.
So in other words, calmer waters, but still plenty of chop ahead.
That is exactly right. However, the geopolitical risks that are on the table right now are really what's causing many challenges. And I think the sooner this war is over, the better off and the more stability that there's going to be. That includes, the courts ruled in February that the way that tariffs were implemented was unlawful. So a lot of tariffs have come down, drastically down. So I think, as we move forward, they're going to have to figure out a way to pay these importers back. I don't think they have a process yet, but there's going to be some more turbulent times ahead, I would assume, on the tariff front, depending on how everything goes. Just take each event, with a grain of salt. It's very volatile right now, but I think it'll be better. It's just turbulent at the moment, and that's what we have to remember. We'll still be all right. The world goes through this every day. So
Well, when we do the market commentary podcast and take a look at all these factors, sometimes for me, it just, it's just a lot of numbers and things that don't necessarily mean anything to me until you kind of explain how they can impact us and how they impact our industry. But I will say this, right now, I feel like everybody's sitting on the edge of their seat, just waiting for, what's going to come next. And the anticipation could go either way, I think.
get your popcorn ready,
Yeah,
like
exactly.
our buddy To says. So yeah, we'll keep everyone updated moving forward. We'll do another podcast here shortly, kind of focusing around tariffs and oil, more detailed numbers and how to mitigate some of that and how the NSA can mitigate what we're doing. So stay tuned for that.
All right. Well, sounds good. You heard it here, folks. We'll be back with you soon for another episode of Beyond the Broom. And everybody just try to keep your heads out there.
Hang
Thanks,
in there.
everyone.
See you later.
Beyond the broom.